What I'm going to talk to you about tonight with the XLT and the tokenization of real estate is something I didn't think we'd ever see before, but I'm so excited about that because I want to show you the direct comparison. Because real estate is something that has created the majority of millionaires, period. And over 90% of millionaires invest in real estate to stay millionaires. It is a very good field to be in if you really understand it, but it is dog eat dog, just like everything else. And I want to give you some real information tonight about real estate. How many of you have gone to a seminar in the past? And you can put it in the comments if you like. And you walk into the seminar and they say, we're going to teach you how to make a whole bunch of money in real estate. And they get up there for about an hour and a half and they talk about how glamorous it is, how glorious it is. And then bam, they hit you right at the end saying, now to continue with our course, it's only going to cost you $20,000. Anybody experience that? I have. I've been in those seminars. I've taught all sorts of appraisal classes, real estate classes. I never charged $20,000. Maybe I should have, but that's what happens. And do you know why? Because they're looking for cash. They're looking for buyers. They're looking for money. We sell uglyhouses.com. I actually know the owner of We Sell Ugly Houses. We buy ugly houses. They pay in cash. Cash in real estate is king. Cash in everything is king, but especially in real estate. I want you to really take a lot of notes tonight as I'm going through this. I was talking to a gentleman just yesterday and somebody else today, and this gentleman, he may be on this call, so hello if you're on this call, been in real estate since 1991, and he said something a couple times, and he's so correct in it. He said, yeah, good luck finding the houses. And I'm like, oh my goodness, you are so right. Whenever you see a screaming deal in real estate, you're probably going to, if you don't get in extremely early and time it perfectly and find that house before everybody else, you're not getting that screaming deal anymore because it becomes a bidding war. And unless you have cash, you're not winning that war. You're not winning that battle. You can say, well, you know what? I'll go to the bank, I'll put it under contract, and we can close in 30 days. Then they'll have another offer come in within 5 minutes saying, we'll pay you cash in 2 days. All we have to do is clear title. So title, it'll take us a day or two to clear title. Once we clear title, everything looks good. We're coming in cash and we're closing this bad boy. And that person is going to get the contract 99.9999% of the time, almost every single time. And you can say, well, I'll go get hard money and things that sort, but hard money is expensive. It is expensive. And if anything goes wrong with the contractors showing up on time and, you know, or who in here has flipped a house? Go ahead and put it in the comments. Who has ever flipped a house? And you buy this house and you're thinking, oh my gosh, it looks great. And then you get into it, then there's all these hidden problems in the house. Then all of a sudden you're changing out the electrical and you're changing out this, and all of a sudden this problem rises and this problem rises. Then all of a sudden your margins go down and down and down. You're thinking, man, I'm going to make $20,000 on this house. I'm going to flip it in 30 days. Then 45 days goes by. You're still working on it because contractors don't show up on time, or you know the subs don't show up, or something happens. And then all of a sudden you're 45 days in, and you might have made 5,000, or maybe you lost or broke even, or even worse. Okay, these are real. This is what happens when you see those shows on TV, those glamorous, those flipping real estate shows where people are making all this money and stuff like that. You got to understand they've been at the game for a long time. They've been doing it for years. They usually have contracting crews that are professional. They do a lot of the sweat equity themselves. They put a lot of work, but they have real estate agents that find them deals before anybody else knows about the deals. There's kind of like any other business, there's stuff going on behind the scenes. Where they're finding a lot of those houses are in the pre-foreclosure market. Pre-foreclosure means that there's probably 30 investors that know about it before you do, because they have relationships with loan officers, with realtors, with banks, with mortgages, whatever. And the banks have the list of the pre-foreclosures, and they give it to certain people have access to that. And they're the ones getting the better deals. If it gets onto the multiple listing service, which is called the MLS, say, oh, here's a rental house. I'm going to go check it out. Here's a second home. That sucker's under contract before you even get to the front door, more times than not. Am I lying? Am I making any of this up? No, I'm not. I was in the game a long time. I know how it works. I know how it works. Now, I'm not saying you can't find a deal, because you can, but it's not quite as easy as you think. And if you don't have cash, good luck. I'm just telling you that that's how the game is played. So that just knowing that, there's a lot of things you have to understand. And right now, the last year, there's actually a lumber shortage here in America. Okay, there's a lumber shortage here in America. And you know what that means? Well, what if you go to buy a rental house and you need to fix it up a little bit? You can't get the lumber, which means your contractors can't. Anything can happen. And the cost has gone up. It's increased 400% in the last year. It has. A lot of things, inflation, a lot of costs have gone up. Look at gas, look at things. Don't think it hasn't affected real estate, because it has. I live in Salt Lake, one of the fastest growing cities in the country. We are at 11.8% in growth over the last year and a half in real estate, which is the highest in the country. We are growing like crazy. Well, you know what's going to happen? It keeps growing at this rate. Percentages of real estate goes up, the bubble's going to burst. It's going to pop, just like it did back in 2008, 2009. The same things. If prices go up too fast, too quick, and your returns come too high, what happens? It attracts the investors come in. They're like wolves. They come in, they start flipping house, or they're buying properties, and what they're doing is they're pushing the value up, and they push it up until it bursts, and it just pops, and it's called a bubble, and it just boom. And it's so cyclical. It goes up and down, up and down. There's 4 stages in real estate. There's 4 stages. And it always happens everywhere. One of them, you're increasing in value. It's going up, 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 up. And then the bubble kind of pops. It goes down, 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 down. Sometimes it stabilizes. Boom, things get old. It goes through what they call gentrification. And then they have to fix the area up. And they go in all these cycles. Right, and I understand in real estate, this is how it works. And there's a lot of hidden costs that people don't know about. And there's a lot of headaches people don't know about. And and I'm not trying to scare people from doing real estate. I think real estate is fantastic. It's great. Just know what the heck you're doing before you do it. Talk to an appraiser, real estate agent, both. Actually, I'd say both before you get into it. But let's talk about some other numbers here. The median price in America right now, $295,000. I was speaking with this gentleman in Utah yesterday, and he said, good luck finding any home under $400,000. I'm like, you're 100% right. Even the townhomes right now are in the 3s. California is even worse in some other areas. But the median price in the United States is $295,000. If it's a income producing property, which is considered a second home, not your primary residence, you're looking at a down payment of about 20%, unless you have cash. You're looking at 20%. So you're going to put about $59,000 down on this house. That's what you're going to do. And then the average rent in America is $1,588 a month. Now, you've got to also factor in, are you going to manage that property? Are you going to go pick up the rent every day? Are you going to go make the repairs? What are you willing to do to service that property? Because when you have a tenant, he or she, if something breaks in the house and it's not their fault, and more times than not, you know what they say? Oh, it's not our fault. It just broke. I don't know what happened. It broke. Well, you're paying a management company 8 to 10% if you're not managing it. So out of that $1,500, you're about $1,500 lower because you're paying 10% a month. And then you've got to have a budget for repairs. If you're carrying a mortgage, the average profit on a house right now in real estate for a rental is only about $250 a month. That's the average if you carry a mortgage. If you have it free and clear, obviously you're making more. But if you have a mortgage, because you're still paying the mortgage, you're still paying the bank. And so all of these numbers, when you look at it, the average mortgage cost for every $100,000 you borrow, you're at today's interest rates, you're paying about $500 a month. That does not include taxes and insurance, because once they add that on, you're paying the taxes and insurance. So let me kind of go through these numbers real quick. $295,000 times your 20% down. So now you're borrowing $236,000. You're at prime plus 1 to 3%. What does that mean? Well, if it's your primary residence and your credit score is good, you're going to get the prime rate, which is the best rate. If your credit score is poor, you're going to get prime plus. plus. So instead of 3.5%, it might be 4.5% or 5% or higher, depending on your credit. Now, if it's a second home, it's absolutely going to be higher. Even if your credit is excellent, yet it's a higher risk loan to the bank. So what's going to happen is they're going to say, all right, it's 3.5% plus anywhere from 1 to 3. This is going to be 4.5%, 5.5%, 6.5%, and that's going to affect your house payment, right? That'll affect your mortgage and your fees and everything else. But let's just say $1,380 a month, that is with taxes and insurance, is about what you're doing if you put 20% down on a $295,000 house, which is median. Now with that, go back to those numbers. Go back to the numbers, because if you're paying $1,380 but you're making $1,588, say, you know, I was nice. I said, look, you'll charge $1,788 for that house. You're thinking, oh, I'm making $400 a month. No, not exactly, because again, management company. What if you're in an HOA? You're in a PUD, planned unit development. That means you're paying HOA fees. The average HOA fee is about $200 a month. So anywhere from $150 to $250 plus, depending on where it's at. So there's all these hidden fees and things that people don't think about. And then you say, well, you know, I can sell the property. And then, you know, my plan is, this is long-term. So I'm going to hold the property for X amount of years, and I'm going to allow my tenants to pay it off over time, which is perfect, which is great. And then, you know, I mean, you might have a couple periods here and there where you have vacancies or whatever, you know, things are going to happen. But then you want to collect the second home and the third home and the fourth home and the fifth home as you are able to afford the next one and the next one. Get a relationship with the lender, you know, whatever. I mean, a lot of things you can do, but it's a lot of time, it's a lot of effort and things, but it's not quite as profitable initially as you think. Now, the national rate of growth right now is 4.8%, and that's the high end. That means if you have a house for $100,000, next year, it'll be about $104,800. That's 4.8%. Now, if you take the median price, about $300,000, you're looking about a $13,000, $14,000 gain in your house, which is cool. So it's like, hey, it's worth $300,000 today. Next year, it's going to be worth about $314,000. That's the national average right now. That's where it's at. And on the high end, 4.8%. That's what it is right now. Look the numbers up. Go for it. Yeah, double check whatever you need to do. Confirm. I've been doing this a long time, guys. I know where to find these numbers. That's what it is. I'm going to show you something next that is just mind-blowing. Fractional ownership. Fractional ownership. No, this is not a timeshare. Quite a bit different, actually. The phrase fractional ownership is typically used to describe shared ownership of a vacation or resort property by people in an arrangement which allocates usage rights based on time. In other words, only one owner will be allowed to use a particular home or apartment at a particular time. You're thinking, well, that sounds like a timeshare. Well, it kind of is, but there's more to it. Fractional ownership arrangements can be applied to a single home, an apartment, typically referred to as a one-off fractional, or to a multi-unit building or resort development, which is what we're going to talk about tonight. In multi-unit developments, each co-owner may have ownership rights to all of the units, some of the units, or only one unit, and his or her usage rights and cost obligations may or may not correspond to his or her ownership rights. Okay, get a lot of different things. But what we're going to talk about tonight is very similar to fractional ownership. You're drawing revenue from this building, but you're not being charged the maintenance fees. You're not being charged all of these hidden costs that you could be charged in a fractional ownership relationship. You don't have those. And why? Because of the magic of the blockchain. Because we're tokenizing it. What Mr. Hite has done, he's taken about $125 million and already bought X amount of space, X amount of units. All he's doing is getting his money back by tokenizing it and saying, I want to raise X amount of money so I can get the money back. Then I want to pay out commissions, and I want to also earn a little bit on top, which is any fractional relationship, you're going to get that. But here's what's staggering about this. Here's what's cool about this. You can go in there regardless of what level you're at in real estate. And you can get in phase one for as low as $9.63 for a token. You can get as many tokens as you want until the unit's full. And you're guaranteed an 87% increase within your first year. What's the national average again? 4.8%. The hottest market, Salt Lake, is hot, 11.8%. 87% increase guaranteed if you get in phase one, which is literally the next 50 or so days. Where else will you get that in real estate? I would challenge anybody to put that in the comments. Where else are you going to get that? That's number one. Number two, because I know some of you are thinking it. You're thinking, well, in a house, so I could sell it if I need to. Well, guess what? You can sell your tokens too. You can liquidate your tokens because you're going to be able to take the tokens, sell them to G999, and sell them through any exchange. And guess what? You're not paying a real estate agent 3 to 6% to do that. So even if you just get rid of it and you just, I don't want it anymore, I want to sell it, well, go sell a house. You're paying 3 to 6% because you're paying real estate agents. Sure, you can sell it by owner, but what if a realtor shows the house on the other side? You're the seller, but there's a buying agent, a purchasing agent. That's 3%. Here, you don't have that. So you could offload it. You could sell it just like you sold a house. So you're still getting the same benefits. You're still getting the same benefits. It's freaking amazing. But you're getting it. I did the math on this. At a 4.8% increase annually, after 10 years, you're only up 59% in 10 years. That's assuming the market's still strong at a 4.8% increase per annum. That's 59% in 10 years. You can do it in less than a year at 87%. You don't have to get hard money. You don't have to compete. You don't have to get in a bidding war. You don't have management fees. You don't have homeowners association fees. You're not dealing with tenants. You just own a token that represents real estate. This is a phenomenal deal for anyone. And you're buying real estate in a hot market, in a resort in Dubai. This is fantastic. On top of that, I'm going to show you a couple of things tonight as well, where you are entering into a world where, because of the tokenization of the real estate and other items, you can also acquire another asset, G999. You can actually use your G999 to collateralize, and I'll show you that here in a moment. Think about what's happening here. I want you to really open your minds right here. This is going to change real estate. This will change real estate as we know it. Again, guys, there's not many people that know real estate better than me, and I'm not saying that to brag or something. I've been in it a long time. I've had my appraisal license, my real estate, my realtor's license, and was a lender. I had all 3 licenses. Why? So I can learn it inside and out. As an appraiser, I wanted to know exactly what the realtors were thinking. I wanted to know how the loan officers thought so I could go sell my services to them. I learned it. I lived, breathed, and slept real estate. I've taught classes on it. I sat with investment groups all over, teaching them where to buy, why to buy, which ones to buy, which ones not to buy, what to put in the house to add value, what to not put in the house if you don't, if you say, value and use and all of these different things. I know how it works. I want to throw a simple example at you guys right now. Walk into a subdivision, a brand new build, and you're going to see these sticks in the ground. It's going to say lot number this, lot number that, all the way through. And there's different phases that they're selling these houses in. Think of this example right here tonight. We're in phase 1. If you purchase a house in phase 1 in a new development, you're getting the best deal, period. Every time, 100% of the time. Every single time. So what happens in phase 1, say, have you ever, who in here has bought a new house? Put it in the comments if you've ever bought a new house. You know exactly what I'm talking about here. starting at $400,000. Well, you walk into that room, you walk into the little cubicle or trailer or whatever, or the model home, and you talk to the agent, and you walk out, and all of a sudden you're spending $550,000. So what the flip just happened? It says starting at $400,000. Why are they charging me $550,000? Well, because what they're not telling you, well, we're charging you for this color of paint, we're charging you for this carpeting, if you want these cabinets, if you want this and this toilet, whatever, everything's an upgrade. Everything is an additional charge, is it not? Am I making any of this up? No, I'm not. Again, I've been in this game a long time. So what's going on is you're going to have a mix and match of the houses that are the same size, same model, but different upgrades in each house in the same area, in the same development. Phase one, you're going to have houses that are going to get the basic bones minimum $400,000 house. Your neighbor's going to get a bunch of upgrades for $50,000. The guy next to him is going to get upgrades $550,000. That's how it works. And so when phase two rolls out, your bare bones minimum house is closer to the 450 plus range because the comparables from the first phase are used for phase two, and that's actually increasing the value of phase two because they're pulling those comparables. You need 3 comparables every time, and you need to pull them from 2, preferably from the same subdivision, 1 from a competing subdivision within a mile within the last 6 months. So this is what happens, and what the developers and builders are doing. In each phase, they're making more money. They're making more profits. This is exactly how the game works. You're getting in phase 1. You're getting the best deal. In the next 50 days, you get the XLT token. You're getting that house in phase 1. You're getting the upgrades. You're getting everything before they're inflated in phase 2, phase 3, phase 4, and phase 5. That's what's happening. Because what you're going to be able to do at launch, when we launch this after the building is complete, and we start, collecting the rents and all that kind of stuff, and they surpass phase 3, they go to launch at $18 per token. Well, you bought them at $963. That's an 87% increase. It's almost like getting 87% equity in your house, and you can sell it without paying a real estate agent, without listing it, without cleaning it, without getting it ready and all that. You don't have to deal with any of that mess. This is the future of real estate. Real estate is going to change after we get building number 2 and number 3 and number 4 and number 5 and 6 and so on and so forth. And investors are going to look at this model and say, oh, here it is right here. Why wouldn't I just put the same amount or even less money in this, get phenomenal benefit, 87%? Are you kidding me? And then on top of this, look at the math on this. 14,400 XLT. Well, right now you get them for about $99. That's anywhere from $139,000 to $144,000 for a rent return or a return of $13,500 a year. Well, that's over $1,000 a month that you're gaining, plus the 87% increase. Go back to the other example. If you can't even find a house in America for $144,000. Well, maybe a couple cities like, downtown, like maybe Detroit and stuff like that. I mean, you'll get a couple houses here, like, $50,000, $60,000, but they're usually fixer-uppers. They're usually in there, and you're competing against a gazillion people to get it, right? I mean, that's what happens. This is what happens. In this case, too, it doesn't matter what your income level is. Imagine going in and walking somebody's house, say, hey, listen, I want to just buy your bathroom. It's the most functional house, your bathroom and the kitchen, right? The most functional rooms in the house. I want to buy your bathroom, and I'm going to take whatever square footage is in your bathroom, and whatever rent you're collecting on that house, I want a percentage of what that square footage would pay. That's what's happening right here. So you can come in at $9. You can come in at $100,000. You can do whatever you want. And you're buying a piece of it, and you're sharing the profit of it anywhere between 4 and 8%, which is very, very typical in commercial. I'm like, okay, great. So just break the numbers down. $140,000, I'm making about $1,000 a month. But it's more than that, because I'll take that $140,000, I'm going to multiply it by 1.87, because now my 140 is now worth 140 times 1.87, which is a lot more. So let's go back to that example of a $295,000 house. Now look at this example. Instead of borrowing against it, putting 20% down, say you do the same amount, 295 here, well, you're multiplying it by 1.87. Now your 295 is worth $551,000 in less than a year from now. It's worth $551, and you haven't had to do anything other than just buy the tokens. That's it. Then on top of that, you're collecting the revenue. Well, if you're making about $1,000 a month based off of 144, what are you making off of 295? What are you making off of 551? Do the math on this stuff. Where are your HOA fees? Where are your management company fees? Where in it? They don't exist. You don't have any of them. Move and pick wins by far. It's not even close. When you go to realtors and you go to people that understand real estate, they see this model, they're thinking, oh my good Lord, this thing's phenomenal because look at this. And all the headaches, and I mean, all the creative financing and all the different things that go on behind the scenes, okay? Anybody who knows real estate, you know what I'm talking about. You know exactly what I'm talking about. This is smooth. This is easy. This is simple, and it's much more profitable. Much more. That's why I've been buying XLT like hotcakes this last couple of weeks. I'm like every day, click, 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 click. I get commission, boom, XLT, XLT, XLT. I'm buying it like hotcakes right now because I understand real estate, and I'm thinking this is a fantastic deal. I can, again, 87% return in a year where it can take me up to 10 years or plus to get 59 or more. Yeah, sign me up. Let me go ahead and do it. Not to mention I'm still getting a residual off of it. And guess what I can do with the residuals? I can start buying into building number 2 and building number 3. And I can build an empire of real estate. I can build a portfolio of real estate starting with building number 1 in phase 1 because that's the most equitable phase to start in. It makes the most sense. Right? Well, we'll have the same call here in 50, 60 days. We'll talk about phase 2. And yes, it's still a good deal, but it's not going to be a better deal than phase 1. So now is really the time to get in, get involved, and make some money in real estate and own real estate. And I'm telling you, as they add building on top of building on top of building, this thing's going to be freaking insane. It's going to be crazy. Now, you have 2 options when you get these XLT. I'm using this option right here. I like the collateralization of my G999, and I'll tell you why. First of all, each token's only cost me $84 of Bitcoin or Ethereum or Tether because if you have G999, it can collateralize it. Here's the beautiful thing about collateral. You get it back. You get the collateral is not kept, it's held. It's held. You get it back. 42 months later, all the G999 you collateralize, you get it back. And it goes into a pension for you if you have at least $1,000 of G999 locked up. He'll actually roll stuff into a pension for you. You'll learn more about the pension plans. I mean, what Joseph is doing is brilliant. It is literally brilliant, and it's going to change real estate. And you know what else it's going to do? It's going to drive a lot of value to this coin. It's going to have to. So how many people, as they understand this real estate and build all these buildings start popping up and they collateralize their G999, do you know what it's doing? It's taking it off the market for 4.5 years. Well, 4 years, 42 months, so 3.5 years. 3.5 years off the market. What? Well, because they use it as collateral because, hey, 15% of the cost of the token, I can roll G999 into it, collateralize it, and guess what? I get it back. I get it back. Which is fantastic. And on top of that, I get Lydian Lions. I get extra Lydian Lions to roll into whatever. And so when you purchase these through this option, you would select which state or country you want to roll those Lydian Lions into. And that buys towards a citizenship in a country or state that's going to pay you a residual income just for being a citizen. We're going to tie all of this together tonight. We're going to tie it all together next. But I just want people to understand how good of a deal this truly is. How many of you have wanted to get into real estate but were scared? You couldn't find the property, or you got frustrated because you bid on it, you didn't get it, or all of a sudden you didn't realize it was going to be that expensive, or you've had rentals and all of a sudden you have all these unwanted costs or hidden costs, or you go into a house and, oh my gosh, I thought it looked great, but then when I really gutted it and looked at it, oh my gosh, it's going to cost me 15, 20,000 more than I thought because there's water damage here, or there's something here, or there something's going on. It happens more times than not, and it sucks. I know, believe me, I've done it. I've seen it. I had excellent contractors. They come back to me, John, found something. I'm like, oh crap. And do you know what I'd always ask them? How much is it going to cost me? I didn't even ask what it is. I just said, Joe, how much is it going to cost me? Well, we got to do this and this and this. And if you want it done right, blah, blah, it's going to cost you another 10,000 because it, whatever. And it's going to take another week and a half. And if you have hard money, you're like, oh crap, you're doing the calculations. Oh crap, that's going to cost me the 10 grand plus I got to make another payment to a hard money lender and that is expensive as heck. Okay, been there. All that's gone with this. All of it's gone. But on top of the real estate, imagine getting that rental property with no fuss. You're getting a guaranteed 87% return within your first year, which is crazy. On top of that, say, you know what? I'm also going to gift you ownership as in the form of a certificate or towards a certificate in something called Lydian World, where all of these teams are building all of these people around the world, and they're bringing revenue into these countries, and you're going to get a piece of that revenue. Why? Because you bought real estate. How many real estate agents are going to do that for you? They can't even give you a gift worth more than $50 or they get in trouble. Some states, they can't give you anything. So they're certainly not going to give you ownership in the form of a certificate in a country or a state that's producing revenue. They're certainly not going to do that. They're going to give you a fruit basket. They're going to give you, something cool like that. I mean, that's what they're going to give you, okay? I've seen it. Oh, lovely home. You just paid $500,000. Congratulations. Here's your fruit basket. Enjoy. I hope you like it. I hope you're not allergic to pineapple or whatever the case may be. I mean, and they're being nice and it's cool and stuff. Where they'll give you chocolates. They'll give you what they're allowed to give you, and then they'll put their card in there and say, "Hey, please refer me for the next property. Thank you very much." And they're off to the next. That's how it works, right? This is much better than a fruit basket, okay? Because this fruit basket represents teams and countries. I want you to think about this. I live in MLMville, Utah. There is a company, Nu Skin, about 30 minutes from me. My neighbor, again, Dustin, I've shared this story before. Dustin, right next to my next door neighbor, is a big marketer in Isagenix. He's got this massive team. He's doing really well in Isagenix. He's got a big team in Europe. If I walked over and knocked on his door and, hey, Dustin, how's it going, man? Well, you know what? I've been thinking about this, and I'd like to really. I got two thoughts here. I want to give you a bunch of money or some money, and I want you to give me an override of what your team's doing in Europe. He'll look at me and say, if you're going to give me money, I'm just going to give you the products, and you're going to build your own flipping team. That's what he's going to say. Or I say, well, or you know what? I'm going to go buy a rental house down the street, and if I work you in some way, somehow, magically, I'd like you to give me an override on your team in Europe because I bought a rental house. What do you think he's going to say? He's going to look at you like you're crazy. You're nuts, John. What are you talking about? That's what he's going to do. And certainly go to a real estate agent and say, hey, all right, you know what? I want to start referring business to you. And if you close a house, you give me something under the table. Think of how quickly they're going to say no, because they're not allowed to just give you something under the table like that. If they're giving you something under the table, that license is gone. They can't be doing that crap. So you not only can get real estate without all the fuss, get the guaranteed return. On top of that, get the residuals, buy in at whatever level you can to start your real estate, portfolio. On top of that, you can leverage. You can refer other people, and you can make a commission off of it. And guess what it is? For every GLT that's sold, just like G999, 30% of it is commissionable, and it pays on a line level, let's start this right here, on a line level compensation plan. I'll go back to those slides in a moment. So if $100,000 comes in on your front line because you referred people to it, you're making $5,400, $5,400. And then if they refer someone who's not going to refer somebody to a screaming deal in real estate. They leverage down, you're making all this commission. What do you do with that commission? You roll it over to what? To buy more real estate. Get as many XLTs as you can. Get that 87%, boom. And then you know how people make money in real estate? They whatever earnings they get on house number 1 over time, they use that for down payment for house number 2. And then they do it again for house number 3, and so on and so forth. You can do the same thing, but you're looking at an 87% return versus national average of 4.8. You're looking at a much better deal. Because even if you say, well, you know, I'm going to take another loan out on house number 1 because I want to use that money to pay for house number 2. It went up 5%, so I'm going to take that equity and roll it over. Right? I mean, this happens. It happens all the time. So, okay, well, 87 trumps 5% all day, every day. I mean, I'm not a math major, but just, you know, 87 seems a lot higher than 5 or 4.8. And you can leverage it, make all this commission off of that, just like everything else. You can make commission on all sorts of items on the token. Let's talk about G999 a little bit and how it affects G999. This is why I love this coin so much. This is why I love this token. Whenever you think of cryptocurrency, Bitcoin, Ethereum, Cardano, all of them, it is so volatile. It's just like, oh my gosh, you're just, oh, it's a headache following this stuff. We're tokenizing real estate. We're collateralizing our coin in real estate. That's one thing we're doing. Well, as more G999 is used for collateral, it's taking it off the market, correct? Well, that G999 is not just flooding back into the market anytime soon. Well, then what's happening? Well, you've got to purchase this G999 to use it as collateral. So it's increasing the market cap, which is the money held by people who have G999, and it's decreasing because it's pulling and locking from the capitalization rate. So it's decreasing the overall, it's the capital, that's circulating supply, capitalization rate, long night, circulating supply. It's decreasing that while it's, you know what that's going to do to the value of this coin? It's going to increase the value of this coin. And then what happens to the recruiting in Lydian world when the coin goes up? The recruiting goes up too. And do you know what that does? That drives the revenue up in the Lydian world with those points that you were gifted for buying XLT. That's exactly what happens. So not only are you getting the real estate, you're getting put into this Lydian world. In Lydian world, you're getting paid on all sorts of different things. For those who don't know what Lydian world is, it is literally a virtual world where you can earn money off of other teams in network marketing. That's the easiest way to say it. And merchants coming in to use our blockchain to market their products and services. Some of that's going to be commissionable and added in. Card swipes on the white label. Cards, people, you know, we don't talk about the white label enough. I don't think we talk about it enough. Because that is the ability for companies to use our card option, is a whole other thing we have, and use our card option to pay their employees worldwide and their distributors if they're MLM companies. We have a lot of them looking at us, very interested. All those swipes, all the transactions, everything will add to and reflect what's going on in Lydian world. It's going to add revenue to those pools that you are able to, by default, enter into by purchasing real estate. You're not going to get this in real estate anywhere else. And if we reach our numbers, reach our goals of 70 million, and it seems like, man, that's a big number. Well, we have 100,000 people in this organization, 100,000 people. That's a fraction from each person can make 100,000 people divided by 70 million. There might be people that say, you know, I want to put a couple 100,000 there. I want to put $1 million in. I want to put it. I mean, I want as much as this real estate because they see the value of it. Give me as many tokens as that. My goodness, are you kidding me? Give me tokens. Give me tokens or give me death, right? Give me the tokens. And we hit the 70 million. Guess what? Corporate's going to put $8 million of USDT towards D999, and they're going to pull it off the market. What today's price? That's 13 billion coins. That will be pulled out there. You know what that's going to do to the value of this coin? It'll crush it. There's no way on God's green earth this coin's not going up. I just don't see it happening, because the difference is with the tokenization of the real estate and other things coming, and the ability to use it as collateral and all these other things, and the lithium, you can use it towards, I mean, you can use it towards a lot of different things. All the utility. The utility is what most cryptocurrencies are missing, is really true utility. Sure, they talk about it, but where is it? When you see the utility in action and you see the Lydian world and the tokenization of this and that, you're going to see spikes in the value of this coin. It's going to happen. That's been the plan since day one. You could take those earnings off the real estate. You can say, you know what? I don't know if I want to buy any more XLTs next time with these gains I'm getting with this 87%. I want to buy some Lydian dollars, or I want to buy a G999 because I see that everything's coming together. You can roll it over into more real estate. You can roll it over in Lydian world. You can roll it over in G999. You can roll it over into our trading. When we did the Spartan trading, you can roll it over into our accounts with our bank accounts that are going to pay you up to 12.5% per year just for holding your cryptocurrency. You can roll it over into, find 12.5% a year on your real estate. What's the national average? 4.8. What we're looking at here is, it's remarkable. It is mind-numbing when you think about it. If you're in real estate at all, you should be salivating right now. How many people in real estate in a year, or no, not a year, come on, in any given market where the median house is $300,000, you sell 3 houses, it's $900,000. You sell 3 houses in a month. In the bigger markets like New York and LA and stuff like that, and you sell 1 house and it's probably $1 million. What's your commission on $1 million house? 3%, or depending on who you work for, 2%, 1.5%. Well, what's your commission on it? What if you sold $1 million of XLT? I can tell you right now, you're looking probably at about $30,000 plus. You know, anywhere from 25, 30,000. There's 2 to 3%. But what if you did it? What if you had a couple and you leveraged it and you referred a couple people and did that and built a team? Then all of a sudden you're getting a $13,000 bonus as an ambassador. That's kind of nice. And then what if they leverage and they refer a couple people and all of a sudden you're making more money? That's almost like becoming a broker in a sense. It's all these little agents underneath you selling real estate, selling XLTs. You don't have to go get a broker's license or anything. And I'm throwing these examples out there because I really want you to think about all of this, how big this is, and how important it is to understand. The more you understand about this, you should be jumping off the walls. I mean, this takes real estate to a whole new level. It just does. It just makes sense. And I'm telling you right now, if you don't think blockchain is going anywhere, you're wrong. Blockchain is changing everything. Everything. And real estate is going to change with it. Appraisings are already starting to change. Before 2010, we didn't have the management companies. Appraisers made higher fees. They were able to, do a little bit more for the lenders and stuff. Now they've got all these blocks about all this middleman and this middleman, and every time you turn in the file, there's 20 reviews on it, and it's gotten to the point of holy cow, almost ridiculous. And it just changed again here in Utah, and some other states are starting to implement this too. They're going to allow anybody to train as an appraiser, and do you know what they're going to do? They're going to dilute the market. They're going to dilute the market, and the quality won't be as high. That's exactly we're fighting it in Utah right now as I speak. They're making it easier to become an appraiser. They're making it easier, and they're doing that for equal rights for everybody, whatever. But they're going to dilute the market, and you won't have the quality. And just like what happened in 2010, when the quality went down because there's some bad eggs, it's going to happen again. Mark my words, it will happen again. I've seen this cycle. They keep putting their hands in there and they keep screwing up these industries by passing these crazy, ridiculous regulations and laws. And again, if you're in it, correct me if I'm wrong. Correct me if I'm wrong, because I'm not wrong. I know this industry. I know it inside and out. I also know cryptocurrency, and I know what adds value to a coin, and it's utility, utility, and utility. Just like real estate's location, 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 crypto's utility, utility, utility. You cannot keep coming out with these cryptocurrencies and let the traders come in and manipulate the markets, because that's what they do all day, every day. If you control it in a sense where you can tokenize real estate, you can tokenize retail, you can tokenize all of these things, you are helping create stability in an unstable market, in an unstable industry. That's what you're doing. That's exactly what's happening here. And you are getting paid to leverage. And here's what's interesting. When have I, at any time during this call, mentioned AutoShip? Not once. Do you know why? Because we don't have it. There's no AutoShip. So don't let the networking aspect scare you. Let it excite the hell out of you, and I'll tell you why. Because it's more G999 being entered into the market. It's more people buying G999. The networking aspect of this is absolutely brilliant because it is driving more people to the coin, and then you give them utility ways to use the coin to create stability within the ecosystem. Then on top of that, you open up the ecosystem to real estate. You open it up to for retailers to come in, brand their products and services using our blockchain, and they must use our coin to pay for the services, which creates more utility, and that is night and day difference between people coming in and trading. You can plug into all of it just by starting with the real estate. Or you can just do the real estate. You can do whatever you want. You can create a phenomenal income for yourself. I know, I've seen it. I won't tell you how much I made in month 2 and month 3, but I can tell you this, it's a lot more than most real estate agents make. I can tell you that. And I'm not knocking the industry. I'm just saying it's a lot more than most appraisers and realtors make. It's a lot more than most professional people make. And I've only been doing this for 3 months, but I understand this platform, and I understand the value that we are receiving with this real estate. So let's do the last slide here. I want you to really understand this. The center of our world is G999, the center of it. Now we have use. We just announced just about a week or so ago, you can now take Bitcoin, Ethereum, and all other cryptocurrencies from your GS Partners wallet and send it to your account with no fees. From GS Partners to GS Lifestyles with no fees. From GS Lifestyles to GS Partners with no fees. No fees. Now, you're going to get fees, like, for example, if you send it from a third party, like Coinbase or whatever, into it, they're going to charge you their fee, but you're not going to get a fee on our end by making those transitions. You can now take our coin and you can say, you know what? When Smart Finance rolling out, I want to earn up to 12.5% on my money. I want traders to trade my money for me. I want to take some of the G999 and collateralize it into real estate. I want to use some of my G999 and get points in Lydian World so that I get an override off of merchants, off of card swipes, off of teams being built. See how it all ties together? There are multiple ways to earn in this ecosystem, and it's so simple. Just know it all starts with G999. That's the center. That's the core. That's the center of your universe. The real estate is a feather in the cap. A big one, albeit, but a feather in the cap. And it's the best real estate deal I've seen in 20 years of doing real estate. Lydian World, another feather in the cap. The card, another feather in the cap. GS Finance, all of it, feather in the cap. Boom. It's just a cherry on top. It all starts to, and the beautiful thing, since it's all tied to G999, oh, I cannot wait for the rollouts when Lydian World starts paying in December. And here's the thing that's great. You're like, well, how can I trust this? Lydian World doesn't pay till December 26th. Well, guess what? Our nodes have already paid. Our staking is paid. Our commissions have been paid for months. All of us have been paid for months and months and months. The people that I get paid every day. I get paid several times a day. Oh, it works. We're getting paid. So don't think that they're going to say, well, they're just not going to pay us in the Lydian World. Oh, yes, they are. They're not going to pay us on Move and Pick. Oh, yes, they are. Oh, yes, they are. Why not today? Well, easy. The building is complete in October. Once it's complete, they start filling it. Boom. Then shortly thereafter, first of next year, you get paid. And then all of a sudden they're selling the tokens to other people coming in at $18 that you can get for $9.63. You can sell those tokens for an 80% increase, 87% increase. And there's going to be a market for it. Do you know why? Because there's going to be people in the building living in it, paying rent and stuff. They're creating a market for you. You don't even have to fill your own building. They're doing it for you. Ladies and gentlemen, this is one of the coolest things I've ever seen. I get so excited because I've been in real estate a long time. I've never seen anything like this, and certainly not to use it as just one. I mean, my goodness, to me it's a no-brainer. Get the real estate, but man, roll some over to Lydian World, roll some of the stuff over to all these other. I've got all these residual incomes, all these streams of income, and all I did is started with the XLT tokenized real estate. Understand everything. GS Partners, and you can understand why I'm so flippin' excited tonight. I'm so excited about it. I'm excited about that. And ladies and gentlemen, thank you for coming out tonight. I hope everybody has a great night. Be excited because you're allowed to be. And if you've been afraid to get into real estate in the past, you don't have to be afraid anymore. Get with the person that got you to this call and learn how you can get into the game of real estate safely, a lot easier, and for a lot less. Starting at $9.63 and up. That's it. Pretty sweet, huh? Everybody have a great night. We'll talk soon.